Everyone stick around because Constantine is going to be covering crypto. Okay, so you're going to learn a lot about crypto. Constantine, welcome to our community. I'm going to make you the panelist here, and then your audio should work, and we'll have a conversation. Can you hear me, Constantine?
I can hear you really well.
Okay, how about your volume?
It's great on my end.
A little higher would be helpful. While you're doing that, I just want to introduce you. Constantin Gurdgiev, you can follow him at GT Cost, and he is an associate professor of finance at Middlebury Institute, International Studies, Cal. He's live from Dublin, and he's also an adjunct professor at Trinity there in Dublin. So if I read your whole bio here, Constantine, we wouldn't have any time to talk about crypto. But as you can see, he's very accomplished, and we're fortunate to have him here. And I noticed, Constantine, that you have a lot of info on your blog about crypto. So why don't we cover what you've been telling your readers and people listening to your lectures about what you feel is behind crypto, and then we can move on to the decentralization argument.
Well, Dale, listen, cryptocurrencies are hot right now, especially Bitcoin, but so is other ones such as Ethereum, Ripple, all the various different coins coming into the market. Institutional investors are getting in, retail investors are deeply into it. There's a huge debate going on about the fundamental valuations behind those currencies. And on the side of this all, there is a wonderful technology which is being developed and being used by a range of companies, which is the blockchain, which underlies the cryptocurrencies, of course. But I
noticed in your notes to me this morning, Constantine, that you've been involved with some different fintech companies and helping them with blockchain. So
I'm a huge fan of blockchain as a technology. I'm not a technical person, I'm more of a finance person in this context. And as a big fan of blockchain as the future for the transactions registry, data storage, data processing type of platforms, I'm at the same time a very skeptical person vis-a-vis the cryptocurrencies that are being traded today, and in particular Bitcoin, because in a way, though Bitcoin and other cryptos do underlie the blockchain and have created the entry into the blockchain technology itself, they in a way drawing attention away from the technology itself and creating a huge speculative bubble in terms of the valuations of those currencies. So this ongoing saga of ever-rising market valuations for cryptocurrencies, as you know, have captured pages and pages of mainstream news, attracted millions of investors and so forth. 6 months ago, Chinese traders and miners dominated the market for Bitcoin. Today, the hype has spread globally. Draws young hipsters from South Korea, all the retail investors from Japan that tried to bring all Japanese housewives back into the market. Scores of desperate middle-class types from Venezuela and parts of Latin America, crowds of techies from the US, you name it, everyone is into it. At the same time, Bitcoin and other currencies, cryptocurrencies, have earned the attention of armies of financial analysts and academics. So if we go to the kind of top level, I'll give you 5 key features of cryptocurrencies that, as their most ardent proponents would allege, underpin their fundamentals in terms of the valuation. The first one is, you already mentioned, the decentralized and global nature of the cryptos, which in common language really means that they're independent from the monetary and financial authorities. The second one is a high degree of blockchain security. This is an argument which means that blockchain is unbreakable and so forth, and therefore we cannot really violate the security systems behind the Bitcoin itself. The third one is a limited supply of cryptocurrencies, most importantly Bitcoin, because this is the only one which is really fully limited by an algorithm, which theoretically implies the ability to hedge inflation risk. And this is a big selling point for the Bitcoin enthusiast. The fourth one is anonymity, or if you want to put it differently, ability to hold Bitcoin and other cryptocurrencies beyond the reach of the coercive power of the state. People like me, libertarians, usually tend to like this feature without really considering its deeper implications. And the fifth feature is the high degree of blockchain efficiency in transmitting and storing information. I mentioned that very briefly already. There's much more to it because, in my view, there is a deep disconnection between the blockchain efficiency and the lack of efficiency and lack of liquidity in the market for the Bitcoin itself. So I'd be happy to walk
Okay.
that, and I will give you some of the more insight into research that we're doing, myself and my authors are doing in that space as well, with the new paper coming up.
Okay, so Constantine, the volume's not that great from your side. Some people are having a hard time hearing it. I turned off my volume. I could hear you. Would you consider what's happening in crypto right now analogous to what was happening in .com? And even though there was a .com bust, out of the .com bust came some leadership that ended up surviving a washout and became the new leaders in tech. And perhaps the same thing could happen, that we have some type of washout in crypto, and because the technology is here to stay, that this will be survival of the fittest in crypto?
I would agree with your view there, and I would raise it a little bit. I think the stakes in the current hype cycle surrounding Bitcoin and to a lesser extent other cryptocurrencies is certainly much higher than they were in the case of the .com bubble. From the point of view of those currency valuations, there are no fundamentals that are holding those valuations currently. So it is anybody's guess in terms of the value of those currencies in the market that will prevail in the long run. It can be anything between $0 and $1 million Bitcoin valuation. It can be pretty much anything in between. What you pointed to is a classic hype cycle. Like the .com bubble, like pretty much all of other bubbles, what underlies the Bitcoin bubble today is a technology which is ultimately highly useful. It probably in itself is also quite overhyped as far as the extent of the blockchain technology and its impact in the long run on the financial services and other services in that division.
Do you think the anonymity aspect of it is overhyped because regulators and tax collectors want to know about crypto transactions?
Well, that's completely true. The issue of anonymity of Bitcoin and cryptocurrencies holdings is similar to the issue that relates to security as well. While the actual holding of the currency can be anonymous, investors in these currencies are still subject to legal, taxation, and regulatory controls operating in the jurisdiction of their domicile or in the jurisdiction where they intend to use these funds, or both. More importantly, the need for regulated and data captured intermediaries that are required to transact in the real economy, that when you are using those currencies themselves, implies that what's anonymous in holding today is no longer anonymous in its use or trading. And this ambiguity between the promise of anonymity and the requirement upon the investor to disclose their holdings for tax or legal purposes in relevant jurisdictions is an added pitfall for many retail investors who can end up with an egg on their face, unexpected legal and tax bills, facing potential penalties and fees, simply because they assumed at the point of investment that their holdings are truly anonymous. Bitcoin is not free from capture by the coercive action of the state whatsoever. And it's, you can see this developing already. South Korea is trying to regulate it. The United States is certainly trying to regulate it. There is a host of other securities and investment regulations which are already in place, which do apply to Bitcoin. Bitcoin is not an island on its own.
Okay, what did you make out of China's move to ban it and its limited impact?
I think the limited impact of the bans on Bitcoin are pretty reflective of the fact that the large part of the markets for Bitcoin are effectively bifurcated. There are effectively three types of markets for cryptocurrencies today. The first one is that the mine and hold market. So in other words, miners who produce the Bitcoin or other cryptocurrencies themselves tend to hold on to Bitcoin and not sell it or not trade in Bitcoin itself. So that creates a very large pool of illiquid Bitcoin and other cryptos sitting out there waiting for some big catalyst to push them into the market. And that relates to the issue of the liquidity itself. The second pool of investors are the mom and pop type of speculative investors who engage in a speculative strategy, but at the same time adopt the buy and hold type of position. In other words, they buy for speculative purposes, but they're not willing or able even to trade at current spreads, for example, which have sky high latencies in terms of trading, which are really long. They're not able to trade efficiently. So as a result of that, there is a clear dichotomy or disconnect between the retail investor's position in Bitcoin and their perception of Bitcoin as a liquid instrument that is suitable at the same time for buy and hold type of strategy. There is a third really large pool of investors, much larger than the currently retail investors, so hard to estimate in general overall, and that's the investors who buy Bitcoin and hold it for the purpose of money laundering or evasion of capital control. China is experiencing all of these type of investors because it is a major center for mining Bitcoin, a dominant player in the market for mining Bitcoin. A known number of the intermediaries holding those exposures right now, and a known number of miners holding exposures right now. And the government, while trying to crack down on that, really can't do much in this space because it is decentralized at the point of holding. Now, beyond that, there is retail investors, and I think the Chinese authorities were severely concerned with that. Like pretty much every authority, under the sun right now. The Japanese are concerned now. The South Koreans already mentioned they're significantly concerned with two aspects: the retail investors' positioning in Bitcoin, and at the same time the exchanges, security, stability, and regulation.
What about the aspect, Constantine? I'm watching a trade right here. You know, you have $50 in between trades. I mean, the spreads are ridiculous, but I think more importantly is that even though there's an illiquid futures contract now, most of these exchanges are unregulated. Could they be bucket shops? There's even been some talk, I believe, iCoin or one of these exchanges, people aren't able to get their money out. Do you think that could be the death knell? Is a big Bitcoin exchange going under, not being guaranteed by anyone, like regulated exchanges like the Merck or the Board of Trade or the Life or anything that is regulated, that people think their funds are safe until they try and get them out of there?
Correct. Well, there's two aspects to this type of the security. One of them is the technical security or technological security of the exchanges, which is a really weak point in the current default blockchain and cryptocurrencies link. And another one is a liquidity issue. So in terms of the straightforward securities, this is one of the purported strengths of the Bitcoin and the cryptocurrencies, and it is also a myth. While blockchain mechanism is possible to hack by itself, the real vulnerabilities in this system rest in exchanges and storage wallets. To date, there have been no major hacking successes with respect to the larger traditional financial exchanges, but at the same time, this does not mean that they are not, of course, vulnerable to attacks. But it does suggest that regulatory supervisory pressures exerted by national authorities do provide some measures of centralized security in traditional asset markets. Also today, there have been at least 11 documented attacks and large-scale breaches in cryptocurrency exchanges. So 0 to 11, and it's 11 that we're aware of in this scalable type of event. So in general, frequency of hacks and security breaches in cryptocurrency markets is growing in line with Bitcoin price and incentives to undertake such hacks. The higher the price, the more incentive the hackers will have. And there's already exceeding similar events for the major corporates listed on the main stock exchanges. Our recent research, myself and co-authors, shows that cyber criminals respond strongly to financial incentives in undertaking criminal hacking activities, and that applies across all of the different financial markets and different financial assets, from equities to bond markets to anything else. And as Bitcoin value continues to rise, so will the attempts to crack the security codes protecting cryptocurrency investors.
What do you make out of how difficult, even with a regulated contract like the new futures contract on it, that you need 400% margin? That means 4 times the contract value to initiate a short position. I mean, how can you have I would call it a market that has integrity if you can't trade both sides of it. And do you think it's a coincidence that Bitcoin is starting to come off since the launch of the futures contract?
I think it is right now. It's very difficult to assign the relationship between the Bitcoin price and the futures contracts themselves directly. We have to look at empirical data. In general, in future currency, we find in our research that the lack of data, the shortage of data horizon over which we can analyze, for example, fundamentals of the future currency and things like that, is certainly hindrance. So you're pointing to the whole issue of the overall market liquidity, which is extremely low in the case of Bitcoin. You mentioned that even in the options market, there is a difficulty in terms of the securing the opposite side of the trade, in terms of the options. Shorting is one of the examples of that. But if you go into the underlying fundamentals of the Bitcoin itself, the latency is huge. It can take you between 26 hours and more to clear the transaction. This creates, and also in addition to the spread of us, you can take, $25, $50 spread trade. And as a result of that, what that creates is a concentration of holdings of Bitcoin by retail investors on the exchanges in centralized wallets. These are sitting ducks for hacking. As we have seen with the collapse of several exchanges recently, or big shocks to several exchanges recently, the money simply evaporates out of the account. The only way, this is the irony of that, and Bitcoin's brothers actually this week have shown to us, the irony of securing Bitcoin holdings is actually printing out your key, the security key, and holding it in physical paper format. In fact, Bitcoin, what they do is that they apparently, in the interview to the Business Insider, they said that this week, that they have actually cut up the key, the printout of the key, and stored it in physical safety boxes in banks located in several locations in the United States. I mean, you're using the 14th century banking technology to secure 21st century unbreakable, fully secured blockchain solution marvel. I mean, that's the irony you have. So yes, you are correct in terms of the more instrumentation we're inducing into the Bitcoin market. In theory, that should be raising the liquidity of the market itself. Currently, it's not doing it because the underlying technology is so congested and the markets are so inefficient that you have the combination of spread and latencies, which will never be supported by the active trading in terms of the options. And as a result of that, by the way, what you're also doing, the instrumentation has a knock-on effect of linking closer and closer Bitcoin to the decisions by the central bankers. So, for example, some recent research already shows, academic research shows, that the Fed rates decisions have an impact on Bitcoin valuation. So, remember the problem.
Okay. All right, that's a great segue to your other wheelhouse, which are central banks. Why don't we wrap it with just a quick summary of the Fed, PBOC, ECB, BOE, and what you think is ahead for 2018. What's really on your radar screen for next year? What are you telling your listeners and readers to be alert for, because 2018 may be different than 2017?
Well, I think the beginning of 2018 is going to be a natural continuation of 2017. The psychosis in the central bank's decision-making based on the fear of what the tightening of monetary supply is going to do in the markets. I mean, the Fed, the ECB, the People's Bank of China, all of the major central banks have engaged in a vast amount of the creation of liquidity in recent years, and they're fully aware that that has created unreasonable expectations and a longer-term unreasonable expectations from the markets in continuity of this money supply. So,
yeah, you penned an article, dancing away, central banks dancing away from QE.
Correct.
So that's the theme, that they're dancing away
from QE without pumping the market. Now, what's interesting is there's a couple of dimensions which are going to start playing out probably at the end of the first quarter 2018 and onwards. The first dimension is the relationship between the differentiation in policy direction between the European Central Bank, the ECB, and the Fed. And here, there's a second dimension which enters, and this is, of course, the change of leadership at the Fed. And in my view, the pivot of the Fed away from the longer term, or at least stated officially longer term objectives of inflation targeting and the likes, towards the shorter term objectives, watching the market and watching the market reaction. So the ECB is trying to play a longer term game. They're in the QE and continuing to taper gradually over the 2018 through September 2018. The big unknown, which we will learn about probably closer to the summer, early summer 2018, is what's going to happen after September 2018, when the QE is supposed to end in the ECB, world in the Eurozone, and the rates should be starting to normalize towards the beginning of 2019. This type of time it might be changed, and the change will be signaled probably in the beginning of the summer. But in the meantime, the big unknown is what's going to be the Fed. So far, the Fed went first last week, it hiked by 25 basis points as expected. There has been no change effectively in terms of the projections forward. 3 hikes expected over the next 12 months. This move means that the median expectation for the Fed rate of in 2019 remains the same as it was back at the end of September, 2.125% for 2018, 2.69% for 2019. All of that seems to be very stable and all. But all of that, it also hinges on the Janet Yellen being at the Fed chair, which is, of course, living. And it also hinges on depolitization of the Fed, which he has managed to maintain throughout the last year. He could go fully political Fed down the road. That's going to be a speech towards the watching the markets, being afraid of spooking the market, and concentration on asset markets rather than on inflation and targets and the like. In this case, the Fed will probably slow down the pace of hikes even more. And in this case, again, we're sitting back for any sort of economic correction, which we're overdue anyways. And if that happens, the Fed is going to be in a tough spot. What is going to do in terms of the rate policy, the proverbial bear will be charging, and the proverbial bullet will still be spent. So in a way, that creates uncertainty towards the end of the 2018. And the same uncertainty then arises in the renminbi dollar pair, in the euro dollar pair, because of the PBOC and the ECB is starting to experience more pressures in terms of unwinding more aggressively than the Fed into the second half of the year.
Well, thank you so much for being with us today, buddy. I want to wish you and yours a Merry Christmas and a great 2018. And maybe we could get together and next time resolve the audio issue and see what's happening. Maybe in the spring, you and I could get together, have another conversation. Constantine.
Thanks, Dale. We'll be delighted to again, Daniel.
All right. Thank you so much, Constantin Gurdgiev, and you can follow him at GT Costs. And this is a man that has his pulse on crypto too. So follow Constantin to be alert to central banks, what they have planned, what the implications are in crypto as well. So thank you again, Constantin. Thank you, F.A.C.E, and see everyone tomorrow. Good hunting, and most of all, remember, don't just count your pips, count your blessings. Adios. Thank you, Constantin.
Thanks, Dale. Cheers.